Gravita, that's the stock we're going to be starting with and putting focus on first. The company reported its Q4 numbers, 15% growth in terms of revenues. Margins a slight bit of a subduedness, 10 to 15 basis point contraction in terms of EBITDA margin. But other than that, the net profits of the company are also seeing a growth. Now, to talk more about that in terms of the numbers of the company, where should one expect the company to move on from here on? We do have Yogesh Malhotra, whole-time director and CEO at Gravita India, joining in with us. Thank you so much, Mr. Malhotra, for joining in with us this afternoon on ET Now. I want to start by talking with your volume numbers. Interestingly, they've grown around 15% YOY in the quarter that we've seen gone by. What led to the outperformance in the volume growth, and do you think we will see the volume growth somewhere moving much better than this? The outlook in terms of volume growth over the next few quarters, where is it headed?
Yeah, so good afternoon first. We have grown at around 15% this quarter. But if you look at the larger period, for the past 5 years, we've been growing 22% on CAGR on revenue numbers and around 74% on PAT numbers for the past 5 years. And our future outlook is also that we would grow at around 25% CAGR on revenue numbers for the next 4-5 years. And the profitability would be even higher at around 35% going forward for the next 4-5 years. So we are increasing our capacities both in India as well as overseas. In this year, we have increased the capacities from around 227,000 metric ton to 300,000 metric ton, so which is an increase of 29% capacity increase. So, of course, there's a new wave where everybody is now interested in recycling and sustainability. The society is also positive, and the governments are also backing up. In India, there's a specific tailwinds with EPR and battery waste management rules that are focusing on organized recycling in India. So all these factors are basically giving us the boost that is required to achieve our 25% growth rate for the next 4-5 years going forward.
Right. So good afternoon, Mr. Malhotra. This is Shailja joining in the conversation. You did touch upon what you're expecting for the year that we are in right now. But if you could tell us what actually gives you the confidence for delivering such a strong revenue CAGR growth, or even the profitability growth that you are witnessing, or you're expecting about 35% plus profitability growth with over 25% ROC, and also over 50% share coming in from the value-added product. What gives you the confidence for that? Also, what are the levers of growth that you are envisaging going ahead?
I mean, if I talk about India, there's a huge shift from unorganized to organized happening in the recycling space, which is backed by the policy framework that India has gone after. Both extended producers' responsibility and battery waste management tools are the key factors that is affecting this shift from unorganized to organized sector. So because it's more sustainable if you do it in an organized manner, and also it's more environmental friendly. Both, I mean, it's not only from the government point of view, but the companies, the corporates are also understanding this fact, and they have increased the overall content, recycled content in their products, not only in India but throughout globally. That is one factor. We at Gravita have that advantage in the sense that we are operational in not only in India, also in India. We are one of the only very few companies that are having more than one recycling plants. In fact, we have 4 plants in India covering North, South, Central India and West India. Apart from India, we also have our own plants in many other countries. We have a very vast procurement network spread it across 21 countries across the globe, which gives us access to cheaper raw material. So all these factors combined gives us and we have seen in the past 5-6 years also, we have taken advantage of all these things and have grown, as I mentioned earlier, also at around 22% CAGR. And the profitability will increase much faster because of the economies of scale and also our global operations.
Right. Mr. Malhotra, what is also important that what we're seeing is that the debt of the company has risen to around 450 crores as on 31st March 2024 versus around 310 crores last year. what has led to this in terms of the upmove that we're seeing in terms of debt? Why is it risen in trade, as well as what is it that you are expecting, and you have plans in terms of expansion plans? Are you expecting the debt to further rise from here?
So the debt in the longer run will go down because, as I mentioned, because of economies of scale and also because of larger domestic scrap availability. Unfortunately, in the third quarter and to some extent in the fourth quarter, we were affected by the Red Sea and there were some logistics interruptions, and because of that, the inventory levels have also gone up, and to some extent, the accounts receivable have also gone up. So this is only a temporary phase. We are very confident that because of availability of local raw material, domestic raw material, the inventory levels would come down going forward, and the working capital cycle that is currently at around 90 days, in the next 4 years it would come down to around 60 days. So we are very consciously reducing our overall working capital cycle, which will impact the debt also. So on the absolute, probably the debt would go up, but the debt equity ratio would come down, and the debt EBITDA ratio would also come down going forward.
Let's talk about the revenues. You did speak about the domestic market, how things are shaping up on that particular front. But given that you generate about 40 to 50% of your revenues from overseas operation and exports, if you could tell us how is the demand environment that you're witnessing in the international market? What sort of an outlook do you have in that particular domain? And as well as, if I could squeeze in one more, is just to understand that what's the revenue share that you're targeting from your various segments? You're present in plastic, rubber, as well as in aluminium recycling.
So the demand for recycled products have gone up throughout the globe. So we are very confident of increasing our capacities, and there is no dearth of market for the products that we are making. Incidentally, we are also targeting 50% value-added products in our kitty. Currently, it stands at around 45%. So that is another thing that we do that gives us higher margins. In terms of what was your second question? Can you just come back with your second question, please?
Yeah, I just wanted to understand that what sort of a revenue are you targeting going ahead in your various segments that you have, the plastic, rubber, aluminium recycling?
So currently we have 4 verticals of lead, aluminium, plastic and rubber, and lead of course is the biggest one with around 85%. In the next 4 years, we want to reduce it to less than 70%. For that, although lead is also growing at a very fast pace, we believe that aluminium, rubber and plastic would grow much faster than this. In addition to these 4 verticals, we are also targeting other verticals like lithium-ion battery recycling, paper recycling and steel recycling. So these will also contribute to reduction in the total dependence on lead recycling.
Thank you so much, Mr. Malhotra, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show, as well as understanding where the company is headed. But with that, let's just slip into a very short break.
If you like this video, then like, share and subscribe to ET Now.